A special thank you to each of our subscribers who make this channel possible. Here's today's story. In a move that has sent shockwaves through global financial markets, U.S. President Donald Trump has officially enacted a series of new tariffs targeting imports from Canada, Mexico, and China. Effective as of March 4, 2025, these tariffs come as part of Trump's ongoing strategy to tackle the fentanyl crisis in America, which he has declared a national emergency. The tariffs include a hefty 25% tax on Canadian and Mexican goods and an increase of a previously imposed 10% tariff on Chinese imports, which has now doubled to 20%. This decision has led to immediate and widespread reactions from international markets, with European and Asian shares predominantly trending lower as investors brace for the economic fallout. The immediate aftermath of the tariff implementation saw Germany's DAX index fall by 1.8%, while France's CAC 40 and Britain's FTSE 100 also experienced declines of 1.1% and 0.4%, respectively. In Asia, the Nikkei 225 dropped 1.2%, and the Hang Seng Index fell by 0.4%. The Shanghai Composite, however, managed to edge up slightly by 0.2%. Market analysts are expressing concerns that these tariffs could lead to a significant economic downturn. Francis Lewin, CEO of Geo Securities in Hong Kong, remarked that the situation is a lose-lose for all parties involved, predicting a shift in agricultural orders away from the U.S. towards South America. Investors had been hopeful that Trump would opt for a less aggressive approach to trade negotiations, but the latest developments have dampened those expectations. The S&P 500, which had seen a strong rally in previous months, experienced a sharp decline of 1.8% on the eve of the tariffs. This drop has reduced the index's gains since the last election to just over 1%, a stark contrast to the peak of over 6% it enjoyed earlier. The recent losses have particularly affected tech giants such as Nvidia and Tesla, with Nvidia's stock plummeting by 8.8% and Tesla declining by 2.8%. As the tariffs take effect, the implications for American consumers and businesses are becoming increasingly evident. Experts warn that the prices of essential goods such as food and automobiles are likely to surge, exacerbating inflation concerns. The tariffs are estimated to apply to around $1.4 trillion worth of imports from the three nations, a move that could potentially reduce the U.S. GDP by 0.3%, according to the Nonpartisan Tax Foundation. In retaliation, Canadian Prime Minister Justin Trudeau has announced that Canada will impose 25% tariffs on approximately $155 billion worth of American goods, with immediate effects on $30 billion worth of imports. Trudeau criticized Trump's actions, stating that the tariffs would disrupt a successful trading relationship and lead to higher costs for American consumers. Trump's administration has justified these tariffs as a necessary measure to combat the ongoing fentanyl crisis, which has been linked to illicit imports from China, Mexico, and Canada. The president has claimed that these countries have not done enough to curb the flow of fentanyl into the U.S., stating on social media that drugs are still pouring into our country from Mexico and Canada at very high and unacceptable levels. Commerce Secretary Howard Lutnick echoed Trump's sentiments, emphasizing the need to address the fentanyl issue to save American lives. The administration's stance is clear. They believe that aggressive tariff measures will force trading partners to take more substantial action against drug trafficking. However, the economic ramifications of such measures are raising alarms among economists and business leaders alike. The potential for job losses and increased consumer prices is a significant concern. Trudeau's response highlights the risks associated with trade wars, emphasizing that American consumers will ultimately bear the brunt of these tariffs through higher prices for everyday goods. As the situation unfolds, the global market remains on edge, with investors closely monitoring the reactions of Canada and Mexico, as well as China's response to the increased tariffs. China's Commerce Ministry has already announced plans to impose additional tariffs of up to 15% on key U.S. agricultural products, further complicating the trade landscape. In conclusion, the implementation of these tariffs marks a critical juncture in U.S. trade policy, with the potential to reshape relationships with key trading partners and impact the global economy. As both sides prepare for potential escalations in this trade conflict, the focus will undoubtedly remain on the economic indicators and market responses in the coming days and weeks. That's all for this story. We upload videos every day covering many different subjects, so hit that subscribe button to stay informed. Thanks for watching.